The trade is a naked strangle on AMD. We're going to collect $6.37, and this thing expires July 31st before earnings. We are talking a put that is about a 4 delta and a call that's a 7 delta. Probability of profit, 93%. If you look at the chart over here, guys, this is the range we're talking about. We're looking at AMD in the July 31st frame. We have a 350 put and a 750 call, and we are going to collect $6.37. So if we pull open the option chain for AMD and we want to look at this, setting this trade up, right? AMD's IV ran up to 104. Guys, when we see a 30, we think that is high. This thing is moving in sympathy with Micron. I actually put this on the day after Micron earnings because the IV was still juiced up. And guys, look at this range, right? AMD is trading at $520 right now. We can go almost $200 out of the money at a 5 delta now. This was a little bit higher a little bit ago. A 5 delta, right? And on the call side, we can go all the way up to a 750 call at a 7 delta. And we're collecting $6.36. This trade is going to use up about $26,000 of buying power. However, guys, because of the duration of this trade, right? This is about a 24% annualized profit. So if you have the buying power, this is a very high probability of profit trade that we have right here with the 750, 350 naked strangle on AMD. And you know, guys, aside from, you know, the juicy premium that we can get with such an elevated IV, the other thing I like about this is if you look at the chart, you know, if we look at the put side, the 350 is slightly below this big gap up. Right? So even if we make a push down, for some reason we start selling off and we make a push down, you know, we've got a swing low right here at 450. We got another swing low wick down somewhere around 405, 394. Then we get to the gap. Okay, and if we come to the gap, that's at 360. If we get down to the gap, fine. We can roll this thing out because the time in the trade, you know, it's got what, 30 days left. And I'm only going for a 50% max profit. Okay, so if the IV comes down, and like I said, we are at 104 on the IV. If this thing starts coming down, and guys, I'm only going for a 50% max profit on this trade, right? So we're going to try and make $315 in as little time as possible, really, if the IV starts coming down, right? And like I said, we're at a 104. If this thing can start coming down to 80, 70, 60, we're probably going to be able to collect our premium, get out of the trade, and move on. This is a extremely high probability setup, like I said, 7 delta on the call, 5 delta on the put, collecting $6.36 on the trade, expiring July 31st. AMD Strangle. Guys, this is not financial advice, but this is how you can kind of play the earnings off of another ticker, right? Micron had their earnings and AMD rocketed up in sympathy with Micron. So we're going to get this juicy IV without having to trade AMD over earnings. This is Luke with the Option Bomb. Again, not financial advice. Hope this helps. We will see you in the next one.